Hey guys, John Swain here from We Love Small Business, and in today's video we're gonna dive into my top 6 tips for selling your business. But first, before I get started, I want you to hit that subscribe button and the notification bell. I do these kinds of videos all the time. And if you're a small business owner, you have a question, chances are I've done a video on it. So use my content and prosper, but please like and comment on this video so we can tell the fine folks at YouTube that you like this stuff and you want more of it for you and other small business owners. Now, whether you're considering selling your business or preparing for the future, adopting the mentality of always being sale ready is crucial. So let's get started. Number 1, leave lots of runway leading up to the sale. There's a whole bunch of reasons why you want to prepare well ahead of time. But 2 really big reasons are this. The buyer values the business based on past performance, and they're going to want to assess the last 3 to 5 years of your operations. And you're going to want to make sure that you were reaping every last dollar you could in profit to reflect the reality of things. And that's that you have a terrific business and it's worth good money. And if the current financial statements aren't reflecting all that this business could be, then you have time to put things back on track to really make this a profit generating machine. This longer runway also allows your advisors to keep an eye out for opportunities and good fits for potential buyers. Okay, and the second big reason for a long runway is one of the key aspects of succession planning: minimizing taxes. And things like the capital gains exemption, which is this really cool exemption available to Canadian taxpayers on the sale of the shares in their small business corp. But it comes with a bunch of ifs, ands, or buts. And there may be some work and a waiting period to deal with these things if they're not tickety-boo. So I'm gonna put a link in the body notes to the capital gains exemption video that I did, but I'm also gonna tell you to call your accountant as soon as you're done watching this if you suspect that there might be some wrinkles that you need ironing out. Number 2, decide what you want to sell. Is it the shares or the assets of your business? When it comes to selling your business, one of the first decisions you need to make is whether you want to sell the shares or assets. Each option has different tax implications that you should carefully consider with your accountant. If you choose to sell shares, think about whether there are specific elements you want to retain, such as like a particular business line or assets like cash or real property. Selling shares and selling assets have very different tax implications, as you might have learned from the video that I referenced earlier. As a seller, you may prefer to sell shares, while buyers typically prefer to buy assets. And this can create conflicting objectives, but with proper planning, you can find a solution. So keep in mind that there may be 2 prices to achieve the position that you want to end up in after taxes have been paid. Number 3, understand the value of your business. Understanding the value of your business is essential to the planning process. Your accountant can provide guidance on a range of values. Buyers are usually interested in future cash flow and a reasonable period of repayment. So they're going to look at multiples of net income or cash flow to assess their investment. Although a certified business valuator can provide a formal valuation, it's not always necessary to get a general sense of your business's value. Additionally, it's crucial to understand your value to the business and what happens when you're no longer involved. So consider staying on for a while to help the new owner with the transition. And this not only ensures a smoother handover, but also maintains the continuity of the business, which is often valuable to the buyers, hence a bit of a higher price. Number 4, keep the potential buyer's trust. As you start to entertain discussions with potential buyers, being completely honest and transparent is so important to a good sale. And this might seem like obvious to you, but it's worth mentioning. Remember, a buyer's trust is ultra sensitive at this time. If they sense you're holding back on something or overdoing it on something else, their spidey senses are on high alert. This is usually a pretty big deal for a buyer as it is for you. And I've seen deals go bad when one party isn't quite being as open as possible, even when things aren't really flattering. And here's the thing. A buyer will find out the truth eventually, and they can make things very uncomfortable for all parties later if they find out that they didn't have all the info. Number 5, ensure the buyer is using independent advisors. Now this point is getting really nitty-gritty and something that really doesn't come up until the sale is imminent, but it's also crucial to ensure that the buyer is using their own independent advisors. And by making sure that the buyer understands the implications of the negotiations, you can prevent complications in the 11th hour, which I've seen. I've even seen deals completely fall apart. Again, this might seem like a no-brainer, but I've seen lots of folks just rely on everything that the seller puts in front of them. And they'll even say they understand everything, but I've been doing this way too long to learn that they don't. 9 times out of 10, they really don't. It's come to the point for me that I won't represent a seller if the buyer doesn't have their own independent CPA and lawyer. It's just too heartbreaking watching this stuff fall apart at the end after the seller has already gone out and bought, a summer home in Florida. Number 6, selling and buying a business is an emotional process. Letting go of something you've built can be challenging, and stepping into someone else's shoes as a buyer can be intimidating. Try your best to remain objective and not take things personally. Focus on the bigger picture and the potential for growth and new opportunities. Now, that's it for my list, but there is one crap load of stuff you need to know going into a sales situation. And everything I've just mentioned is food for thought that will never take the place of a cool accountant in your life, like me. So book a call. See you next time.